My name's Keith Lewis. I'm a journalist who specialises in the financial services sector. We're here today to talk about peer-to-peer crowd lending, or crowdfunding as it's sometimes called, and I have with me Neil Edwards, who's the managing director of an agency called The Marketing Eye, which has a lot of clients in this sector and for whom they do a lot of work. So Neil, just to start off with a couple of observations really.
Sure.
The Financial Conduct Authority, which oversees this industry, brought out a report recently which has generated quite a bit of publicity, and it's being interpreted by some as a massive slapdown for the peer-to-peer lending industry. Do you see it that way?
No, I don't, to be honest. This is a rapidly evolving industry, and I think it's only natural and to be expected that there will be a continued review of compliance in the sector, and we should expect the FCA to always be wanting to review what's going on and how the industry is evolving.
So it's part of growing up?
Very much part of the natural evolution of the industry, yeah.
Okay. Do you agree that the public needs protecting from peer-to-peer lending, or should they take some responsibility themselves?
I think there's a certain element of responsibility that the industry has to take for protecting the public, and the sort of messages and the claims that it's putting out there for it. But it's like all things, it can't be 100% responsible, and I think we can draw parallels with things like stocks and shares. You or I or anybody else could quite happily go out and buy a share in any company without without having to have lots of people around us telling us whether we should or shouldn't do it. We can choose to get financial advice, but we're clearly at liberty to go and get that advice ourselves. So at that level, I think the individual investor has to take responsibility, but the platforms themselves must make sure that all of their marketing is clear, fair, not misleading, and if we can get that in balance, then everything should be fine.
The FCA is talking about introducing new rules by next summer, which seems an awful long way away right now. But are you worried that they might stifle competition by introducing heavyweight legislation to really protect the few?
Yeah, well, will they introduce heavyweight legislation? That remains to be seen, doesn't it? Again, as we were saying, it's about a review of practices that are going on. We're seeing lots and lots of different business models now coming into play, and I must say I do have a lot of sympathy with the FCA, trying to come up with a set of rules which do work for everybody, but do take into account all the different flavours of not just peer-to-peer lending, but property lending, equity crowdfunding. Is clearly a difficult challenge for them. So my expectation would be that they will endeavour to be pragmatic. I think they've got a track record of that, of being that so far. And we'll try to find that right ground between allowing competition in the marketplace, allowing continued access to finance for SMEs, which was the original sort of concept, the original mission of this whole movement, but at the same time, making sure that investors are properly protected as interest in the sector grows.
Do you have any views on who might be in a position to give that advice? We have an independent financial advisor community in this country which doesn't seem to want to know when it comes to peer-to-peer, and yet it strikes me that there is nothing between the public and the media who appear to be doing the role of advising, and where they're not frankly qualified, neither are they independent, and neither do they have to take the consequences of the advice they give. So the IFAs aren't in the market, and it's the media seem to be dangerously sort of in a position to influence. It's quite a worrying situation. Would you agree?
Yeah, well, I would. You're quite right. At the moment, people do rely on the newspapers, what their friends tell them, or indeed, of course, they're having to rely on the claims and the promises made by the platforms themselves. Where is the IFA community in this? And we know they have issues and they have concerns about peer-to-peer finance, and they talk about not being able to properly assess the risk. They talk about professional indemnity cover not being there, and we know they worry about whether they're actually regulated or not. These concerns have got to be removed, and I think a helpful thing the FCA could be doing is working with the IFA community to provide them some reassurances in this area. You know, there is lots of data around on risk, both at an industry level and at an individual platform level. The FCA can answer their own questions around the level of regulation that an IFA needs, and I think if those two things come together, then the insurance industry will then start to back the products through professional indemnity, or back the advice rather. This is probably the biggest obstacle now in terms of mass take up of investment in peer-to-peer lending or peer-to-peer more broadly. And until we can get the advisory community in there on terms that they're comfortable with too, we're always going to be held back. So I would say that's a significant area for the FCA to be looking at its own contribution.